Hey guys, welcome back to my channel. Oh my gosh, this technology stuff has been crazy. But hey, I'm so grateful to be alive. I hope you guys had a great Labor Day yesterday, and I hope you guys did something fun. So if you're catching me on the replay, drop something in the comment section. Let me know where you're joining me from today. And thank you so much for joining me again on my channel. So if you're new to me, my name is Karina Burgess. I am an enrolled agent by the Internal Revenue Service, and today I want to talk about S Corp. So for the month of September, we'll be talking a lot about S Corp and stuff. I told you guys this last week during our live call, and I wanted to let you guys know what's going on, that kind of thing. So I'm just checking a few things here, making sure everything is going well. Okay, perfect. Perfect. All right. So, without further ado, I've talked about S corps a lot. It's a thing that everybody is like, should I do S corp? Should I not do S corp? What are my advantages, disadvantages, things like that? And those are all great questions because as you grow your functional medicine practice, there are so many things that you have to think about and like, should I do this? Shouldn't I do this? And it can get overwhelming on the tax front when you're not sure which direction to go. So I wanted to just cue you in on several things. If you already have an S corp, then these three things that I'm going to be sharing are things that you need to pay close attention to. And if you don't already have an S corp, then these are three things that you really need to pay attention to when you're thinking of transitioning to an S corp here in 2024. So S corps normally are you can choose to be filed taxes and S corp right out the gate. You have like 75 days after you form your LLC to do something about it. So 2.5 months, right? But not everybody knows this, or not everybody actually take up the IRS to make that election within 75 days or right out the gate. We've seen people that done right out the gate, right after, and years after. And the sooner you get it done, the easier it is, the less complicated things could be. Of course, there are outliers on either end of the fence. So, one of the things that we see a lot of is reasonable compensation for shareholders. So, normally a S corp can only have up to 100 shareholders. Okay, 100. That's it. There are some catches that a family member, if you have multiple family members, and you could just count the family idea. But in general, it's just 100 shareholders. So shareholders are normally what, like, some people call them stakeholders in a C corp. Some people call them different things. Partners in a partnership. For an S corp, is shareholders, and so 100 shareholders. Most of the ones that we see are under 5 shareholders, so things don't get too crazy and things like that. But when you have an S corp, what is essential for you to realize is that you can no longer go on taking money out of the company thinking like, this is my company, I can do whatever I want whenever I want. Yes, lady, you can, but just bear in mind that there are consequences at this point that you will face as an S corp owner. And one of those is reasonable compensation. So what is reasonable compensation? Reasonable compensation is making sure that as a shareholder, as the owner of the S corp, that you're taking a reasonable pay for your services. So most of the S corps that I'm familiar with are, the owner is a head cook and bottle washer, as they would say, right? So you're the advertising person, you're the payroll person, you're for your employees, you're the bookkeeper person to make sure your records are done. You're the janitor. You are all the things, right? And then you actually go and work into the company. And so what the IRS wants and what the law requires us of you to do as an S corp holder is to actually separate those things. And so in a regular business that you go to a doctor's office, you go to an attorney's office, they have somebody who's a receptionist and they're paid a fair wage, right? You have somebody who does the marketing, they're paid a different wage, generally higher, right? So what the IRS is looking at is making sure that you separate those how do you call it, those responsibilities in the business, and that you're taking a reasonable pay for your services that you are contributing to the company. And that's called that's called reasonable compensation. Okay. Now, a lot of times S corp owners end up paying their employees as contractors, and this will run you into a lot of trouble, because there are three top categories that the IRS is looking at when it comes to differentiating if somebody's an employee or if they're an employer, if they're an employee or they're a contractor. And once you mess with the lines and you start paying a contractor as a employee as a contractor, then you are now looking at, you're stealing from the IRS, you're stealing from the employee, right? You're stealing from the state that you're in, and they will all come after you viciously. It's called trust funds, right? And so that is a steep, hefty penalty. It's 100%. And it's, if you're not there or you didn't know, and this video is like, oh my gosh, is she for real? Yes, I'm for real. How do I fix this mess? Then you need to make sure you get that fixed right away with a CPA attorney, an enrolled agent like myself, that will help you go through the process and fix it step by step, because your employees and yourself need to be taken reasonable compensation, and you cannot pay your contractors, you cannot pay your employees as contractors. Which moves me into point number 2, misclassification of workers. If you have, for example, you have Jane, and Jane comes into your work every single day. You tell her where she needs to be, what she needs to do, how much she's going to pay. You're providing the computers for her to do the front end of the work, the front end of your office. You not manipulate, that's too strong of a word, but you are governing and controlling her time. You tell her where to be, when to be, how to be, all those things. Jane is technically, based on those, a employee, not a contractor. And so if you're working and paying Jane, if Jane is working for you and you're paying Jane as a contractor, this is what we're talking about with the worker misclassification. And that's where you need to really dial it back and see what, when you're hiring somebody into your S Corp, you really need to look at, what am I hiring them for? How is this going to work? Can they be a contractor? Should they be an employee? How does the state see this? How does the IRS see this? Before you make that final trigger to say, okay, I'm going to hire them. I know some of you like hire first and then you think later, and that's okay. But if that's you, that is the reason why it's important for you to work with a professional that can help you backtrack, but not just backtrack, but backtrack and fix the problem, so you don't end up with a bunch of issues, penalties, interest, fines, things like that from the state, the IRS, and even you could potentially lose your employee, right? So you don't want to ruin those relationships. You actually want to edify those relationships and take care of people, take care of your employees. Now, my next point is distribution. Okay. And these 3 things that I see, they all tie into each other. Reasonable compensation, misclassification of workers, and distribution. You cannot take distribution until you've taken compensation. This is not a Schedule C. A Schedule C, you could take as much money out of the business as you want. There's no basis to track. There's no shareholders to report to. There's no nothing to, there's no checks and balances, so to speak. It's just your baby. It's your sole proprietor. Once you hit an S Corp, you've entered the big league, so to speak, quote unquote, right? And so shareholders sometimes take money out of their S corporation before they take wage and compensation out. And what the IRS can do is, and they sometimes do it, is they go back in and they reclassify that distribution that you took out that's at a lower tax point than your wages. They go in and they reclassify your distribution as wages so that they could get theirs out, and so that everything falls back into place where it needs to be. The general rule of thumb is to make sure you do wage and compensation. So if you're not on payroll as an S Corp shareholder, doesn't matter if you own the thing. if you have an S corp, you need to be on payroll. Okay. And when it comes to reasonable compensation, that's negotiable in some aspects, because sometimes your business isn't quite making the money that you want to take out. So as a functional medicine specialist, you might be making $180,000 in the ER, right? And now when you come out, you're like, my business is barely grossing $100,000 a year. How am I going to take 180? It's not there, so you can't actually take it. But within that $100,000 that you've generated, you should be paying yourself something from that. And you're going to do that by putting yourself on payroll. When you put yourself on payroll, you run it, whether you're going to pay yourself bi-weekly, weekly, monthly, something. It needs to be something that is steady and is set up, and you do it religiously as you continue to grow your income, if you say that you are being taxed as an S corp. So I hope that makes sense for you guys. If you have questions, feel free to drop them in the comment section. I am also going to drop my link below so that you guys could book a free consult session. Like if you have problems that you get in a letter from the IRS that says, oh, you owe trust fund penalty, you didn't do payroll for this year or that year, I'll do a consult with you guys. And I also have paid consult sessions for if you already started working on it and you're like, holy crap, I don't know what I'm doing, or I just need to make sure I have this one little part taken care of. That is generally a one-on-one a la carte consultation that we do, and I'll drop the link for those for you in the comment section. So if you guys have any other concerns, please let me know. And I think that's it for today. So just a brief recap. 3 common issues faced by S corps today are reasonable compensation for shareholders. Number 2, misclassification of workers, right? And number 3 is distribution, taking distribution without compensation. So make sure you set yourself up so you're not having yourself or your S corp paying costly legal battles and fighting back and forth with the IRS, because that could get ugly rather quickly and nobody has time for that. So thank you guys so much for joining me today. I appreciate you guys, and I will see you guys next week. In the meantime, be sure to catch all the short videos that I'll be pushing out this week, next week, as you continue to build your knowledge and get tools to help you make informed tax decisions. Until next time, bye guys.